Now today, the central banks of two major African economies, Nigeria and Kenya, have chosen to keep interest rates unchanged. Nigeria's central bank kept its benchmark interest rate on hold at 13%, but loosened monetary policy by cutting banks' cash reserve ratio in a bid to ease liquidity shortages. Kenya's central bank, on the other hand, held its benchmark lending rate at 11.50%, saying inflation had fallen towards its medium-term target. Now, the South African Reserve Bank's decision on interest rate is due Wednesday, with analysts predicting it to remain unchanged at 6%. Many African currencies have sustained heavy losses this year on the back of a firmer US dollar. The US Fed's decision not to raise interest rates last week has prevented further losses, but the US Fed is tipped to raise rates in November, which is likely to see central banks in Africa raise theirs in turn, in a bid to buffer local currencies. Now, we're joined by Deji Batmus, who's live in Lagos, and Sumitra Naidu, live in Johannesburg, to talk about this decisions. Both of you, welcome to the show, and I'll start with you, Deji. Now, as predicted, the MPC retained the MPR at 13%, but we saw Governor Emefiele did say that the macroeconomic outlook remains fragile. What are the key takeaways for you?
Well, thank you very much, Uche. For me, the key takeaway from this, and which, of course, would be the biggest takeaway, is the decision of the Monetary Policy Committee now on the cash reserve ratio. Not a surprise at all that the CBN, or the Monetary Policy Committee, now decided to reduce the cash reserve ratio to 25%, basically reducing it by 600 basis points. But something quite surprising, because you know, before now, we had all been talking about the TSA, that's the Treasury Single Account, that the federal government actually set up, directing all government ministries, departments and agencies to shift their account and revenue to that account. Now, a lot of analysts had said, you know, the shifting, the movement of, you know, the movement of funds now from the various banks to this Treasury Single Account and the central bank had created liquidity problems for the Nigerian banking sector. But then the CBN governor coming out to say, look, that has not been the case, that from the data they have, as a matter of fact, there was a marginal increase in the liquidity available to the Nigerian banking sector, and that if at all there was any kind of negative impact, that it was actually moderate. So for me, that was a very big takeaway. And, you know, the CBN governor saying that on one hand, and on the other hand, you know, the committee took that decision to cut down the CRR down to 25%. But let's not forget, Uche, that in taking the decision, the vote was 7-3, unlike in the past when you would have a unanimous decision, Uche.
Now, Sumitra, on the other hand, South Africa is actually expecting its decision tomorrow. Now, it seems the consensus is that the Reserve Bank will maintain rates at about 6%, of course, after the U.S. Fed held rates last week. And, of course, U.S. officials pointed to a resumption of policy tightening by the year end. Is this the sense you're getting, Sumitra?
Yes, it does seem like the picture has changed after the last MPC meeting we had. It was clear that the Reserve Bank was going to hike rates to keep inflation under control, largely as a result of the weakening rand. And even though inflation is still ticking up, it does seem like the bank will hold off, as you say, in light of what happened in the US, slowing growth in China, and also because the South African economy is really struggling. Consumers are taking enormous strain. Businesses also feeling the pain as a weak rand eats into profits, but it's going to be a really tough decision. It's almost as if damned if you do and damned if you don't. The rand remains at its worst level in 14 years and is unlikely to strengthen anytime soon. While this is good news for exporters, it's pushing up inflation fast, and the mandate of the Reserve Bank is to keep inflation under control. If it doesn't act now, it may be more pain, especially for the poor, but some say a rate hike now might just be too much and push South Africa into a recession.
Well, Deji, over to you now. Emefiele also mentioned that if proactive measures are not taken, Nigeria could slip into recession. Now, how does that fact that we haven't seen Buhari present his economic team yet, how will this bear on the decisions reached today?
Well, basically, what Emefiele said was quite true. I mean, remember the last MPC meeting they had, he did say that, look, there is a limit to which monetary policy could be used to address some of Nigeria's economic problems. So basically what Emefiele was alluding to there was basically saying, look, there is every need for the fiscal side of things to, to take shape. And rightly, you observe there, President Buhari is yet to name his cabinet. We still do not have the economic team in place. And of course, the president has said, well, that before the end of this month, and we just have a few days to the end of the month, the ministers would be appointed. So we're all waiting. And but fact is that, look, what Emefiele said is nothing new at all. We've always known, and analysts had always predicted that Nigeria may go into a recession next year if something wasn't done to address Nigeria's economic problems. But the general hope is that when the president appoints his economic team, when the ministers come on stream, then we would begin to have fiscal policies. The administration will come up with robust fiscal policies now to tackle some of the problems confronting the country, especially when you talk about job creation, you talk about unemployment in this country, and you talk about, other issues that you just would not be able to address with monetary policies alone.
Now, Sumitra, very quickly, South Africa is also currently coming under some pressure. Its economy is experiencing inflationary pressures. And of course, we're seeing poor economic growth. Due to the murky economic growth outlook over in South Africa, could we possibly be seeing a cut in interest rates instead of a hike?
Well, I'm sure it's under debate, but some economists are warning that that could be a really dangerous move, as it could push South Africa into stagflation. We already have low growth and high unemployment, and with the rand likely to remain weak or even slip to weaker levels, inflation could push up significantly. Food inflation is already starting to tick up because of drought conditions. Soon the impact of a weaker rand will add onto that. If the Reserve Bank cuts, and a few months down the line when the US decides to hike, we may find ourselves in a really sticky situation trying to play catch up. So far, none of the economists I've spoken to think a rate cut is in the offing. The majority are saying no change, with a handful saying a hike is the way to go.
Well, thanks so much, Sumitra and Deji, for your insights.